Hi, this is Thomas Wood with Microquant, and once again, we're going to take a look at the Value Charts Futures Live Trading Room Trades of the Day for Thursday, June 20th, 2013. Had a very good trading day today. A lot of excellent trade opportunities presenting themselves. We had a lot of excellent trades. The markets, as you know, way down today after the FOMC. After we had FOMC yesterday, markets started falling, haven't stopped since. Gold was down over $80 an ounce today, and several of our best trades were in gold. First one I want to point out is we had a bearish divergence here on our 1,000 tick chart, where we had higher prices, moderately overvalued, with a significantly lower high MQ momentum histogram. That gave you the ability to get in gold right up around 1306, 1307 area, and gold sold off all the way down on that move to 1290, so about $16 an ounce, $17 an ounce in that area, so about $1,600 to $1,700 per contract. The next opportunity we had was right where this red arrow is, and that was off of a 500 tick bearish divergence, which you can't really see right now because I don't have a 500 tick chart pulled up. I have a 1,000 tick, but if you pull up a 500 tick, you had a nice bearish divergence there as well. And then the last short opportunities that we had here in gold, we had one off of a yellow jacket doji right here, where you have a moderately overvalued doji pattern pulled away from the 8 EMA. And then the last one we had was we had this trend line drawn, and we were saying, okay, watch for it to break the trend line. If it breaks it, we would expect it to fall. That would have gotten you short right around 93.80, 94 area, and that dropped all the way down to 12.86. So you had the ability to take out $700 or $800 a contract there. So not a bad move on that trade either. Now the next trade I want to talk about is a short we had in crude oil, and this was an excellent trade. If you at both your MQ trend and your MQ regression, they were both down on this 30-minute chart, saying we were in a downtrend. And then you look at this candle right here, we had what we call a yellow jacket doji. Once again, we have a doji pattern, moderately overvalued body of the candle with a lower wick in fair value, pulled away from the 8 exponential moving average, right up against the high of this previous bounce right there. Gave you the okay to get short. That would have gotten you short at the open of this bar at 96.90, and crude oil sold off so far to a low today of 95.18. So very nice move, almost $2 an ounce, so almost $2,000 a contract that you could have taken out in crude oil with very minimal risk. You would have been risking about $100 a contract, maybe $200 a contract with your stop loss. That's all I have for today. I hope you enjoyed it. If you want to learn more about value charts or about the Value Charts Futures Trading Room, please click the link below, and don't forget to subscribe. Until next time, happy trading.